Holy smokes, in this video, I'm going to tell you exactly where to invest in 2023. I'll tell you whether it's the right time to buy right now or not. And we'll go through capital city by capital city, capital growth predictions for 2023 for the housing market in Australia. And if that wasn't enough, I'll also take you through the predictions of more than 15 banks on what interest rates will be, because that obviously informs whether it's the right time to buy, which capital city you should buy in, and the capital city predictions for 2023. A lot to cover. This is going to be a stellar video. Wait right till the end because you're going to know exactly where to buy and whether to buy. All right, carry on watching. My name's PK and I help people build passive income using the Property Investment Accelerator, using data without needing a $15,000 buyer's agent every single time. And in this channel, we talk about the economy, property, and financial happiness. Smash the subscribe button, give it a thumbs up. I'm so excited. Let's go. So this right here, my friends, is Louis Christopher's or SQM's housing boom and bust report. Now, before you think, oh, look, just another random table with random predictions, I want to preface this by saying that Louis Christopher, perhaps apart from myself, no, I'm just being cocky there, is the best property predictor in Australia. Like every year, banks, NAB, CBA, Westpac, etc., come out with their property predictions. The IMF comes out with theirs. The Reserve Bank, everyone has a skin in the game. They put their dice out there, their chips in the game, but no one's ever right. For example, in 2022, all the banks expected housing market to rise by more than 8%. Louis Christopher was the only one who said it wouldn't happen. Now, of course, my clients, and for those of you know what you're doing, you know that you could have made 30-40% in 2022 as well, because we're not talking about just the overall market. There's markets within the markets. But what I'm trying to say is that this table is credible. Louis Christopher knows what he's talking about. I don't agree with him on everything, and I definitely don't agree with him on his view on regional markets, but this is amazing. So let's go through this table first, and I'll take you through the interest rate story because that really plays into it. Number one scenario, number two scenario, 3 and 4. Okay, so with property predictions, we can only make a prediction based on a certain set of rules or assumptions. The first is rates on hold assumption, the base case. Interest rates peak at no higher than 4%. And I'm going to get to in this video what is likely to happen with interest rates. So no higher than 4%. They're just above 3% at the moment. Inflation peaks at 8% and falls back to 5%. Remember, inflation is already falling both globally and in Australia. Locally, I've done other videos on that. You can go check it out. And unemployment rises but stays below 5%. Right now, unemployment is still falling well below 4%. So, it's you tell me leave in the comments actually, do you think base case scenario number one is likely to occur? If you do, leave a 1. Okay, leave a 1 in the comments. But I think that's pretty likely. And if that was the case, Perth would go up 4 to 8%, according to Louis Christopher. Brisbane would go up 1 to 5%. Darwin would fall from -5 to 0. Melbourne would go up a tad, 1 to 5%. Sydney, 5 to 9%. That's very interesting. Adelaide, 0 to 5%, Hobart, -1 to 3%, Canberra, -3 to +2, and the capital city average weighted will be +3 to +7%. So, everyone who's like, oh, there's this massive doom and gloom, there's massive property crash coming. Like, these aren't my predictions, guys. This is the prediction of someone who predicted what would happen to the property market in the GFC, which wasn't all that bad, actually. What would happen in COVID, what would happen post-APRA. Like, he predicted the Sydney boom. Like, this guy knows what he's talking about. Go check it out. I don't get any referrals, unfortunately, but, SQM, they kind of know what they're doing, right? And this is a paid report. I'm giving it to you guys for free, which is pretty cool as well. But what I want you to understand is that the average is still positive. Now, there's two things to understand below that. The first thing is that there's markets within markets. So even though this is saying that Perth under the scenario one will go up 4 to 8%. There will be suburbs in Perth that go up more than 20%. I almost guarantee it, right? In fact, I do guarantee it. That will happen because that always happens. There's always markets on markets. And also in Perth, there will be suburbs that don't go up anything at all, okay? Because there's always poor suburbs within every capital city. That's the first point to really understand when you're trying to figure out this type of info. And the second thing to understand is that this doesn't cover regional, okay? So like, for example, everyone knows how bullish I am on regional parts of New South Wales and especially Queensland. Like I just posted a thing on my Facebook group the other day, like actually yesterday, about one of my clients, JB. If you're a client, you can hook him up or you can link up with him in our private community forum. He bought 172,000 under market value in regional New South Wales in a growth suburb, but regional Queensland is even better. This doesn't cover any of that stuff, right? So take it for what it is. Let's go to the second scenario, Goldilocks. So Goldilocks is like even better than the base case. Interest rates peak at no higher than 4%, okay? Then rate cuts second half of 2023, okay? So they don't go up much more, but then they actually start coming down this year. Inflation peaks at 8%, so same as one, and then falls back down to 5%. That's the same as scenario one. And then unemployment rises, but stays below 5%. So everything's the same in scenario one and two, except for the fact that there's rate cuts. And if indeed there are rate cuts, and once again, stick around to the end of this video, because I'll share with you what not just one or two or three banks think, but what every single bank in a list thinks is going to happen for interest rates, then this is going to happen. Perth, 9 to 13%. Guys, like, I don't know, like, if you don't want to be part of that action, I don't care if you do my course or not, but you just at least do it yourself. Like, why not? You're not making money if you're not investing in Perth. Brisbane, 3 to 7%, not bad. Darwin, -4 to 1%. Never bought a property in Darwin, probably never will. Melbourne, modest. Sydney starts to look very good. Now, always remember, here's the one sort of underlying insight. Sydney, the highs and the lows are accentuated by the expensive properties. So if you're thinking that you're going to make 12% in Sydney this year based on buying around Parramatta or Penrith or Liverpool, it's probably not going to happen. This is accentuated by more expensive properties, but those are more heavily negatively geared. It's going to cost you $20,000 to hold in this interest rate environment to buy a property that's going to achieve this. You know, maybe it's a $2 million property. So just, once again, property economics, try to understand it with that lens on. So that's why we still won't buy in Sydney this year, guaranteed, nor with Melbourne. I definitely won't, and my clients won't either. Adelaide, +1 or 4%. I mean, it's had its day in the sun. I think this is a bit low. I think it'll probably do much better than that, to be honest with you. Hobart, I think this is overcooked. I think Hobart is completely unaffordable for both interstate and local people. I think it will continue to flatline. And Canberra, negative. I mean, it's just done so much well in the last 4 years, even pre-COVID, you know, out fringe suburbs, you know, they like Dunlop, they were booming even before COVID. So it's had its day in the sun. But if this scenario occurs, which is, you know, incredibly likely to occur, interest rates just come down a little bit before the year end, +5 to +9%. Now that is a long-term Australian property growth average over the last 35 years. Okay, so we're going back to normal days in Australian property, just tick, 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 tick. Fault storm scenario 3. What this means is that, oh, we thought things were going to go good, but man, you know, that was kind of a false alarm. So the cash rate pauses between 3.1% to 3.8%, then another rise. You know, maybe the war escalates, or maybe, you know, the US goes into like not so much of a recession, so therefore they continue to hike their rates. By the way, US is already in recession for all intents and purposes, so I don't really see scenario 3 really occurring. But then interest rates rise to above 5%, you know, second half of the year. Just, I mean, you tell me how this would happen if the UK, Europe, and US is going towards recession, which they are. Australia isn't, by the way. I've done another video on that. Then I just don't see how there's appetite for central banks, including ours, to raise interest rates that much if the global economy is teetering. Okay, I don't see how that would happen. Inflation peaks at 8%, falls briefly, then accelerates to 10%. So why would that happen? Why right now inflation is coming down, believe it or not. I've done another video on the real statistics. What would cause it to go up again? Maybe China says to hell with it. we're locking down for another year, with COVID, zero tolerance policy, which they're backing out of, by the way. But let's just say they do that. Then the supply chain bottlenecks, pipe up again out of Shanghai. All the ships are docked. Maybe there's another war somewhere else. I don't know. Those things could cause inflation to go up. But if the global economy is weakening, then that means that demand push inflation is softening out. And so I really don't know how this would occur. And unemployment stays below 5%. That's the same as scenario 1 or 2. If that occurs, I mean, this is like the worst case scenario, and all those like people in the sidelines. I often get some of those comments in this video and these videos as well. They say, oh, look, inflation's going to the moon and back. Even if it does, guys, even if it does and all that stuff happens, we're still seeing positive movement in the Australian property market, 0 to 4%. Just remember, Louis Christopher has no impetus or incentive to spruik property. In fact, last year, he was the first one to say that Sydney house prices would fall around 20% or thereabouts. So and Melbourne, I was saying the same thing. So this is just objective analysis. And we'll go through the interest rates in a second, because that's really the clincher, right? Inflation informs interest rates, informs property prices, according to this. Scenario 4, recessionary inflation. Okay, that's very interesting. Stubborn inflation stays above 7%. All right, well, it's coming down, but let's say it doesn't. Interest rates continue to rise above 4%. Okay, so that's not as bad as this one, but they're still going to rise a lot. And unemployment rises to over 6%. So this is a very interesting one. You've got high inflation and high unemployment, whereas scenario 3 was employment or unemployment still low, but inflation goes high and the economy recovers. In this, you're saying the economy doesn't recover. Unemployment, there's a recession in the Australia, UK, Europe, US markets, but also that recession isn't enough to take the pedal, the gas off the pedal on interest rates. Interest rates go up, recession occurs. It's just like a basket case, almost to a state of stagflation. I mean, this is kind of like the point of no return. Now we're slipping towards a depression. And in that case, house prices would go down -3 to -6%. Still not that stupid 40% drop that Harry Dent and other people who don't know what they're talking about in the Australian context because they're trying to sell a book are meaning. Okay, so let's just go through Perth. In all instances, Perth is going up. So it's no secret that my clients are buying hundreds of properties for themselves, by themselves, using data in Perth. In every instance, even if Australia goes into a recession and inflation goes up, beyond 7% and interest rates go up another 1, maybe 2%, Perth still rises, guys. Perth still rises. Yes, granted, everything else comes down, so you can't just put a blindfold on and buy property, but Perth still rises. And I might add, that's not in this table, regional Australia, many pockets still rise a lot. And remember, 6% might not seem a lot to you, but if you're leveraging 80%, all right, 80%, you're putting down, let's say, a $40,000, $50,000, $60,000 deposit, your cash on cash return buying in Perth, even in this worst case scenario, is 15 to 20%. All right, so that's the power of property and leverage. Now, to sum up, I think we need to understand before we go to the next chart, whether interest rates will actually go beyond 5%, depending on what inflation does. And if they do, then scenario 3 and 4 might occur. But if inflation, or rather interest rates, stay below 4% or even come down, then we're in for another property roller coaster. Not down this time, but up. Let's see what they're going to do. Okay, these are up-to-date interest rate forecasts. Sorry, a little bit blurry, but you've got more than 20 banks, both local and global investment banks, chipping in to say their 2 cents on what interest rates will do. So chief economist Shane Oliver from AMP, he reckons by June 2023, okay, about 6 months from now, interest rates will be the same as they are now. And by the end of the year, December 2023, they'll actually be down, okay? And then by June 2024, 18 months from now, middle of next year, they'll be even more down. So in this scenario, this would mean that property prices grow well over 10% in 2023. Okay, ANZ reckons that they'll go up and just stay at 3.85, not come down, but not go over 4%. So instead of going through all of these, I just want to highlight that by the end of the year, basically all economists recognize that interest rates will not go up 4%. There's only one here, Goldman Sachs. They marginally go up more than 4%. Here you've got Macquarie Bank under 4%. Who is this? Macroeconomics Advisory. Never heard of them, but they reckon it's going to go up more than 4% as well. This one, Morgan's Financial Limited, they're just a cheap version of JP Morgan. Let's not utilize their opinion. The mean, okay, the mean is 3.5 and the median forecast for interest rates by the end of 2023 is 3.48. So if the mean or median has any weighting, i.e. the consensus amongst everyone who knows or pretends to know what they're talking about, we're in for another, I wouldn't say property boom, but at least 5 to 10+% property growth across Australia, nationally average. Okay, some places do more, some places do less. And if we go out 18 months to June 2024, you start to see that a lot of these numbers have a 2 in front of them. That means that they reckon interest rates will go down from the point today, January 2023. In 18 months, interest rates will be down according to AMP, Better Shares, according to Deutsche Bank, according to Emerson Economics, according to FM investors, according to KPMG, according to Macquarie Bank, etc., etc. The median is 3.1 and the mean is also 3.1. So a lot of them think that interest rates will come down, but the median or mean suggests that where we are right now, this will be the prevailing interest rate in 18 months' time as well. Of course, after that, they'll just come down for various other reasons I've gone through in other videos. So to sum up, back to this chart, if market consensus amongst everyone who gets paid $1 million a year and more is right, jury's out as to whether it's right or not. But if that's right, we're in for this environment. We're in for this environment where at least the base case will occur, 3 to 7%. But if the consensus is correct, we're probably leaning more to 5 to 9% capital growth nationally for property. So the 3 questions that I promised to answer, is it worth buying property right now or waiting? It's worth buying because property prices on the rise. Second thing, which market will rise the most? Where should you put your money? Of course, this doesn't show regional, but if I had to pick a capital city, it's obviously no brainer to say Perth. And the third thing is that what is the capital city property predictions going to be like? Well, that's right in front of you. I think let's be conservative and say the base case will occur, but I'm quietly confident that a Goldilocks might occur. But my clients will know, and those of you who aren't my clients, but you know property investing, you'll know that this year we'll all make at least 10 to 20% capital gains again, and cash on cash even more. Thank you so much for watching. Hopefully this gave you value. Hopefully I delivered on the clickbait at the start. And guys, to level up and actually get these results, like hundreds of people that are, thousands in fact, who are part of the Property Investment Accelerator or Level Up, leave links below to my podcast, Australian Property Mastery with PK on Spotify, Google and Apple. Also my Facebook group, also called Australian Property Mastery with PK on Facebook, with more than 25,000 amazing people who are making a ton of money, not to get a Lambo, but just to provide for their family and get some time back. Thank you so much for watching. Hit the subscribe button. I'll see you next time. Bye.